Hello, traders. Welcome to this live webinar here with FXDD. My name is Chris, and this focus is going to be on learn why all traders must know chart patterns. So, as you know, maybe if you're following Elite Currency already for longer, I'm a big fan of wave patterns, chart patterns, divergence patterns, time patterns, Fibonacci patterns. I think it gives an extra layer of information and communication that otherwise would not be seen. So I'm going to dive into that, explain why I think it's important, and also practical examples how to use it, how to spot it, how to trade it, etc. Now, before we do that, though, please be aware of this disclaimer. It explains the fact that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And this video is for informational and educational purposes only. Alrighty, so let's head over here to, first of all, before I take a look at the live charts, excuse me. So I mentioned that already. These are a couple of the patterns that I think are important. Specifically in this webinar, I want to focus on chart patterns though. Now, you know, I'm a big fan of wave patterns. That's basically labeling 1, 2, 3, 4, 5 and ABC with price swings. So the first step with wave patterns is to understand what is a price swing, and basically it is just momentum and correction, bearish and bullish, and then trying to understand the context and the flow of that. But that's a different matter. Divergence pattern is good for understanding when the trend is ending, like the pound dollar. We'll dive into the pound in this webinar certainly many times, because analysis showed that the pound dollar was going to go down at 125, 50, 75, and it certainly did, as you can see. Now, divergence patterns was one of those warning signals, and time patterns as well. So, you know, how many, if price is going sideways, that's a time pattern in a way. So, yeah, it's basically indicating when a breakout should happen. And if it takes too long, then maybe reversal is more likely. But today I want to focus on chart patterns, first of all. And they're basically, as you might have guessed, reversal and continuation chart patterns. Well, basically, reversal chart patterns are, for instance, the head and shoulders patterns that we saw on the pound dollar, for instance, and on gold. Continuation patterns are typical bull flags that pound dollar had a couple of weeks ago, bear flags indicating more upside. And last but not least, what are the benefits of chart patterns? From my point of view, the main key is that it's just as important as support or resistance, trend, and momentum. So those three things, what I call the triangle of analysis, are all crucial. Support or resistance, shows where price might stop or break. Trend and momentum indicates how strong that trend is, whether one side is very strongly in control with momentum, or correction could indicate that there's a temporary pause. All of that is important, but that extra kind of information and layer of understanding the charts really comes from patterns, price patterns, such as chart patterns, flags, triangles, head and shoulders. That kind of gives the sentiment that just looking at trend, just looking at support or resistance would not achieve. You can do a lot of things with these two things, but that extra kind of information that you can derive from price patterns, like divergence patterns, wave patterns, chart patterns, is enormous. So it really gives that ability to make an in-depth analysis and understand the market psychology, the direction, the likely direction, and whether they're interesting trade setups, really. So let's take a look at some examples here on the pound USD, first of all. One second, I have to share the screen here. Not sure if you're seeing anything. Are you seeing an MT4? I don't think so. Let me try that again, though. Good. Yeah, now it's working. All right. So yeah, the pound specifically, I must say that was very nicely how the pound has been moving recently, or at least it moved as I expected, and the chart patterns really help a lot with that. First of all, you can see here a flag. This is a bull flag. This is a bull flag. This is a bull flag. Even this you might consider a bull flag. Wouldn't consider that a bull flag personally, but it's a correction. This is a bull flag. So that all helps indicate that the uptrend is continuing. But also look at how easy the moving averages help determine that. Moving averages are really not connected to flags per se, or any chart patterns necessarily. But what moving averages help with is to understand that the trend is up very clearly, and to understand the bounce and break spots. So the 144 EMA bounce, even though if it gets close. You can even add an 89 EMA to make a zone rather than just one level. That's an EMA that Nenet likes a lot. And then you can understand also when the trend is likely to continue to break out above the 21 EMA here and here and here. Now there are some false breaks here like this. These breaks above the 20 EMA didn't go anywhere because the flag got extended and expanded. So that's why sometimes it's good to have a little bit more clarity maybe with the breakout, either above the fractals or use a wider stop loss. Here, break above the 20 EMA as well, and same thing for here, by the way. So those are all kind of clear continuation patterns that help with identifying upside. Personally, I traded with Elite Currency the longs here and the breakout here, and took profit here at 125, for instance. Nenet, if I remember correctly, as well, took a trade here to the upside as well. I'm not sure if it was through Elite Currency on that one. He did take one here, though, with Elite Currency, right? And aimed there. I'll dive into why that was a good trade as well. Personally, I traded this to the upside. I also took a counter trend reversal trade here and here, not through Elite Currency, just on my own. And those worked out well. And I'll show you why the chart patterns helped with that. So these were a couple of classical bull flag examples, and it helps us understand the market sentiment from that point of view. Reversals chart patterns are a little bit more difficult, but help too. Here you can see a rising wedge like that. There we go. And you see basically what else? You see divergence between the tops on the 4-hour chart. Okay, that's not a chart pattern, but it helps together with the rising wedge because there's higher highs but higher lows on the MACD. There is, from a wave pattern point of view, 1, 2, 3, 4, 5 finished here, right here in this piece where I have my cursor. And there's also 5 waves finished here, 1, 2, 3, 4, 5. So it seemed like a wave 5 of 5. And of course, there are other factors too. Resistance, a very strong push up, so running out of steam probably. So those are other factors that are important too. But yes, the rising wedge certainly was one of the key factors as well, besides the resistance, the wave patterns, and the divergence patterns. Okay, this rising wedge. Then, and by the way, one key note to add is that I expected here already a reversal at first, but then here and here, and price did move lower, but price didn't continue lower. It went sideways. So at that point, I actually reversed and adjusted my analysis for upside, because I agreed with Nenet that this is more looking like a kind of channel, a bull flag, in fact, again here for upside. So that's how this continuation pattern helped me avoid the reversal at a too early moment, because rising wedges typically are difficult to trade. They don't happen immediately, and they can take their time. So when a continuation pattern appears, that's a good hint and a good clue that the other reversal pattern might get extended. And this is exactly what happened. We got the breakout, a very strong candle. That was wave 3, pullback, and one more higher high to expand the rising wedge with one more push up. And that's what finally, when price hit 125.75, started to fall with momentum. And when it started to fall with momentum, that's the clue that a reversal is likely. Here we had that too at the beginning. That's why I was bearish. I'm not sure exactly where this looked still like a bull flag. I think when this dip happened, but then when price went sideways, here that was different. So it fell, and then made kind of a correction. The 21 EMA was bearish. It got squeezed in between the 144 and 21. But because there was so much momentum to the downside, it broke through the 144 and it completed kind of a 5-wave. Now, I don't want to dive into waves necessarily. It's just trying to add the context to these scenarios. But the key for the reversal that succeeded the top of the rising wedge was the momentum. Then we had 5 waves down. More importantly, though, was the fact that there was a potential head and shoulders coming up. All right, from a chart pattern point of view, I should say. Right, so from wave pattern, 5 waves down indicates typical wave A of a zigzag. So expected 3 waves up, which is why I like Nenet's trade from this spot, and I traded that as well, and I exited just below 125. And the reason why I did that, because 125 is a resistance level. All right, I'm adding all the context that is possible, or not all, but important things. Also, because it was a 50 fib, and I was looking for the 50 61.8 fib zone as the key resistance levels. Why those 2 fibs? First of all, it's the ABC zigzag probably, but if we set that aside, the head and shoulders pattern, reversal pattern, here the left shoulder, head, right shoulder, was a very critical component of understanding that market sentiment and understanding the structure, why price was likely to bounce there, in my view at least, for an ABC zigzag. So when price bounced and started to show momentum, it looked good. Then it got back into support. So that was still a critical level, because it could be that the price still expands up to the 61.8 fib. It hit the 50. It could retest the bottom, bounce, and go back up, and still make a head and shoulders pattern later, right? So that was still an important level, and that's why, of course, you got to have the neckline there. So once we had that break, a continuation lower was all but certain in my view. But at that neckline, of course, that was still a critical moment. And, that helped. Candlestick patterns help with that. The next hourly candle breaks through it. But even looking at chart patterns on a lower time frame, using chart patterns on multiple time frames is useful. Because what happened on a 15 and 5-minute chart as price tested in the neckline. So if there would be a bullish bounce at the neckline to expand the head and shoulders pattern, then we would have seen a close in reverse, which means that price would probably move down and move aggressively to the upside and then make a bull flag or so. That's called a cup and handle. So it's down, up, and then the handle. That's bullish, and we would have seen more upside in that case. But price didn't do that. Actually, it just made a little bit of up, then down. So it was a very mild corrective reaction to that neckline. As you can see, it kind of made a bear flag on a 5-minute chart, and then broke the bear flag, and then indeed we got the continuation. So yes, candlestick patterns, one of those patterns I actually forgot to mention, sorry for that. Also, of course, a very valuable pattern, obviously. Again, another price pattern. The 1-hour candlestick pattern right here confirmed a break. But by going to a lower time frame, we could have seen the chart patterns already indicating that a downside was likely and that there was no cup and handle kind of close and reverse kind of pattern here to the upside. If we did have that, then the head and shoulders pattern was still not broken or not confirmed, and we could have seen price move up to the 61 and expand that head and shoulders, which it didn't do. We had a head and shoulders, but at the 50, not to the 61.8 fib. But that was a very important part. Then we had a follow through, went to the target, and if we put a fib on this entire move up like this, There we go. You can see it went to the 38.2 fib. So that was a little bit of a bouncing spot, just like the 23.6 fib is. As you can see, there was a reaction to that. So question from a wave perspective, this momentum down looks like a wave 3. So I still expect follow through towards the 50 fib for the moment. But yeah, no chart pattern, I think, at this moment. I mean, if it would make a bear flag here, then that would indicate that downside is more likely. That would be a continuation pattern. Or if it makes a triangle, this being A, B, C, D, and then up for E, that too, a consolidation pattern after downside momentum indicating more downside. So yeah, that would make sense as a continuation pattern as well in this case, because a triangle pattern is typical for wave 4. Whereas wave 2s typically see zigzags corrections. So, or a wave B, for instance, or let's see if I can find an example. Let's see. Not to, or maybe here. This is maybe like an ABC zigzag. So that's not a wave 2 though, but no, it doesn't matter. So triangles fit the bill here if we get a triangle or a bear flag, for instance. So those are a couple of examples of head and shoulders and reverse and rising wedges that made the downside likely. And now price is back at the 144 EMA. At this moment, no patterns that help. From a discretionary point of view, I think a push lower to the 50 fib and then a bounce up again seems likely at this moment. Here you can see, let me see if I can find more examples. Well, let's not go too far back. I think, these are current examples. They resonate, I think, more than going back too far. So does that make sense so far? Let me check out the questions here. Anana is asking, is currency strength related to moving averages? And I do use a currency strength indicator that is based on moving averages. I'm not sure if that was the question necessarily, but yeah, I think you can read a lot from moving averages and comparing currency pairs with currency pairs. So you can really get a lot of info from that, I think, from moving averages. Absolutely. My whole method is based really very much on moving averages. Let's see. Ali's asking, can you share your discretionary trade setups in the currency? Let's see. I thought, yes, I could. I will do, but I would do it with less risk because I want to give more weight to the official setups. Maybe it's better to wait a confirmation break at near 125. It will be also good. Yeah, it depends. Like it depends all kind of, what is definitely confirmation is useful and good. So for instance, if one expects a bounce at 125.75, then waiting for this bearish candlestick pattern, this bearish candlestick here, makes a lot of sense because that kind of confirms the downside, or this pin bar, for instance, right? Or maybe this bearish candle, for instance, the second one here. So that definitely helps. It all depends on how confident one is with a certain analysis. So I personally had a discretionary pending at 125.60 because of the fact that I thought it was such a strong zone. But that's quite rare. I don't have often that I think that this is that strong. I like to wait for candlestick confirmations most of all, and pending orders are more rare for me. But this was an exception. But usually I would agree and say, yeah, that's good to wait for confirmation. For instance, even a bounce here at the 23.6 fib, for instance, this doji at the double bottom, and still a small signal, but it still helps maybe realize that. And on the hourly chart, there was, for instance, a bullish candle here at the double bottom. That's where I took it, where based on Nenet's trade idea, and that helps kind of confirm it. Here, bearish candlesticks, right, as well, or the lack of a higher high here, time pattern. All of that kind of confirms it. Confirmation, very useful. This 21 EMA is exponential moving average. And if you want to, you can download that free at elitecurrency.com and go to indicators, I think, or tools. We have it there, free of charge. Divergence with the pound was basically between this top and this top, and then this top. As you can see, we had higher highs, but with the oscillator, with the MACD or awesome oscillator as well, they had lower highs basically. So no confirmation there. I mean, no confirmation of the trend. So that's a divergence pattern. Let's see if we can find more examples. Eurodollar had a lot of correction. So ABC zigzag up here was one of them. Then there was a triangle that broke to the downside. Then there was a trendline break here of, I wouldn't not say a bear flag, but it could be a bear flag or ABC up in any case. And this is one that I traded with the Elite Currency to the downside here. So those are a couple of recent examples. Here was a small bear flag as well. So yeah, those are a couple of examples. This triangle break to the downside, bear flag break, another bear flag break. And actually within the bear flag, there was a bull flag right here, actually. Small bull flag here because it was up, sideways, A, B, and then up again, C, towards the 144 EMA. You can see how first the 21 EMA held as resistance with the first bear flag, the second bear flag, then broke above the 20 EMA, went up to the 144, which was a bouncing spot, then rebroke below the 21 EMA. So you can see how the moving averages help identify the flags and the break and bounce spots as well. So triangle break, bear flag break, bear flag break, bull flag break. And now let's hope it moves 6 pips lower and reaches that target, or 8 pips, sorry. Let's see, dollar CAD. Alrighty, dollar CAD is, let's see, more looking like a head and shoulders to me, but these are dangerous. Always a little bit more dangerous, these patterns, these reversal patterns. Neckline is this, so if it breaks through that, it could be a bigger downside. But there's also a cup and handle pattern, actually. Down, up, sideways. So these are a little bit conflicting. Ultimately, when I look at the daily, I'm leaning probably towards more upside. But as you can see, the moving averages are also right flat on top of each other. So it's not that super clear, to be honest. We had ABC down on the weekly, bounce off 144 EMA, and the trend is up. We had a bullish candlestick pattern 2 weeks ago, as you can see, with the bullish close near the high. This is a bullish candlestick pattern. So I think that the bulls are still in control. But it could be that the head and shoulders maybe sends it a little bit lower and then bounces again. Let's put a fib from here to here. And if it does break lower, it could go back into these fibs, 132, 132.20, and that could be a bouncing spot. But it doesn't have to break necessarily. It could also just go sideways. And if it does break higher, that would be, could be immediate breakout to the upside. Because so far, this is momentum and this is sideways. So typically, eventually, I think there should be a bullish breakout. Gold was also interesting pattern. All right, and head and shoulders, left head, shoulder, left shoulder, head, right shoulder, and certainly there was a big reaction, as I indicated in my wave analysis at the elite currency at 1530-ish, 1535, a little bit higher, 1535. Very nice, Ali. You took the short, maybe a little bit impatient, Ali is saying about himself at 1529, but great job. Yeah, it moved a little bit lower indeed, but still, great job for taking that trade. Head and shoulders indeed. And bearish engulfing twin pattern here. And hopefully it will get down. I am waiting for a move down to the minus 61.8 target here, or around this zone here with these previous stops, which I think could be a bouncing spot. So that is another pattern. Now, here we see a good continuation pattern, bull flag. Here we see a triangle pattern, as you can see on gold as well. Like that. That's a typical triangle. So these are very, very typical patterns for the market. These are the most common patterns, basically. Yes, I'm also waiting for 1450. I hope it will get there. Indeed. Bitcoin broke to the downside. That was also a triangle pattern, as you might have noticed, right? And I'm not surprised it broke to the downside, because typically this is actually a bullish pattern. This typically would go up in many cases. But on Bitcoin specifically, I actually expected more down, because Bitcoin it's kind of the pattern over the last years that it does that. It makes deeper retracements first. It doesn't have very solid continuation patterns. It typically retraces deeper, then finds buyers, and then kind of slowly turns like this, and then flies up, and then makes a deep correction again. So I'm not surprised. Yeah, at this moment, no bullish candlestick patterns to confirm it. I still think at this moment it's in the support zone, though. 7.5. There's definitely buyers here. So maybe not right now, maybe a little bit lower, but eventually I think it will turn back up around this area. If it can go that deep, maybe. I wouldn't expect that. I thought that this zone is deep enough, but you don't know. Bitcoin is known for deep retracements, so I wouldn't rule that out, indeed. Yes, that makes sense to me, Ali, except the stop loss. I think there's a typo there. I think you mean probably 1420. Let's see. Yeah, Dow Jones. I was bullish on this one too because of the flag pattern. So, like this. All right, and indeed bounce twice at the bottom, pull back, and then move up again. So it looks bullish to me too based on that. All right. Let me think if I have any other recent examples of flags. Here at the Aussie, beautiful reversal pattern here with the kind of rounding formation here like this, as you can see. And yeah, basically it was a very nice reversal pattern as well, how it played out. And then eventually broke through the 20 MA, made a pullback and continuation. So that worked out very nicely. Let me think of more recent examples if I can think about them. Pound yen had a lot of divergence, for instance, between these tops too, just like the pound dollar. From that point of view, quite similar. Pound New Zealand had a beautiful triangle pattern. This is one I remember talked about intensively. Here with A, B, C, D, E triangle, and I remember trading the breakout after E for upside, and managed to squeeze 170 and 370 on that one. So that was very nice based on that triangle pattern. Ali's adding that stocks might be waiting to trade a trade deal between the US and China before breaking to the upside. And yeah, that makes sense to me. Be careful October. I read that October was a very volatile month. Most years. Next week, Aussie USD interest rate decision also indeed correct. So that could be one of the reasons why it's under pressure. The Aussie, that was one of good observation. Was one of my thinkings as well that could deliver some bearish pressure maybe on the Aussie this week, and maybe even next week, just like it did with the New Zealand last week, as the New Zealand had interest rate this week. There's also NFP coming up as well. All right. Well, I hope that this helped a little bit. I tried to make it more practical rather than too theoretical. Candlestick patterns are a great combination with chart patterns, by the way. So because they kind of confirm whether that pattern is taking place or not. And I think if you're able to add more patterns, then I think it only adds value, of course. So I try to focus mostly on chart patterns, but I think, as I said, not only candlestick patterns, but also divergence patterns and even wave patterns, if you like, and fibs and fib patterns and time patterns. All of that helps kind of understand that market psychology more. So yeah, hope to get more swing trades soon. Let's waiting for the market to give that. At this moment, those swing setups are more focused on with the trend. I am working hard on finding more reversal trades strategies, adding reversal trade strategies. So let's see when that happens. In the meantime, wish you good trading. That should be, well, it's finished. The good part, it's finished. Now I'm going to be working on my course, and yeah, it's just a question of formatting and putting it online. So my SWOT book, I think, I'm not sure. It should be very soon. It's just more like the formatting and stuff like that. So it should be any day now in the next weeks, really, very soon. In the meantime, I'm working on new reversal strategies and a new automated system on 5-minute charts. We are finished with the automated system on 15 and 1 hour, but that is not part of SWOT, but will be offered as well soon. The SWOT book, of course, SWOT course, SWOT strategies are all part of SWOT, and they're going to be added very, very soon. I'm working on that. A lot of things: SWOT course, SWOT 5-minute system, and the reversal strategies. So a lot of things coming up. But luckily, the SWOT book is finished. And if I do see discretionary setups that I like, I will let everyone know at Elite Currency, but we'll take a smaller risk. All right. I guess that's it. Thanks for asking, Ali, and wish everyone great trading. See you very soon. Don't forget to subscribe to the FXDD YouTube channel so that you can follow all of the videos and webinars from Ned and myself. And cheers. Bye-bye.